Hello traders, it's Samurai Trader here. Welcome to this session. Watch me scalp and day trade the ES for 6 trades for 5 wins. Actually, you'll only get to see 5 on this session because I'll show you the screenshot. I ended up executing another trade about an hour later. Now I want to make this educational as well. I want to give you some real ideas on how to scalp and day trade the markets. Look, we'll probably go 30 minutes, and also you'll see I've just fired off 2 trades and I'll show you that live on the market as well. That is, the charts are live, so you'll be able to see those as well. As we get underway, do need to pull up the disclaimer. There is a risk in trading. Please don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable, then seriously consider starting on the micros and building from there. Now I love to use Renko charts. If I keep looking away, I'm looking at the active market at the moment. Just maybe there might be something to show you as it's setting up live. But so I use Renko and tick charts, but you can basically apply the principles that I'm showing you here on virtually any market, any time frame, and any chart type. If you're a forex trader, these setups work exactly the same as what I'm about to show you. Now also, the setups that I trade are all pattern based. That is, certain things, certain patterns set up, and that's what I'm trading. In fact, in Mark Douglas's book, The Disciplined Trader, he points out to become an expert, choose one simple trading system that identifies a pattern, preferably one that is mechanical. Now when I get to the charts, I'll actually explain some of these patterns that I'm looking for. And once you master these patterns, they're very easy to pick up as they set up. So I run a live trading room where I'm teaching traders, and a coaching room where we delve into a whole lot of other subjects on money management and trading psychology, etc. But it's really about learning the syntax, exactly what we're looking for. But what you're about to see in a few minutes is everything, or all of the patterns, all of the setups I should say, are all patterns. Now in today's session we're focused on the ES, which is typically it'll turn over 1.5 million contracts per day. Now as you're about to see, I'm trading this at 7, nearly 8 p.m. on a Sunday evening US time, Central Standard Time, 8 p.m. Central Standard Time on Sundays. You see the markets open at 5 p.m. Central Standard Time Sunday and run right through until that time, actually 4 p.m. Central Standard Time on the Friday. And then they're closed over the weekend. So you can actually trade these markets after hours, and it's called the Globex session. And in fact we get some fantastic volatility, you get some fantastic volume, particularly on the ES. Now to trade the ES, you do however need to have between 4 and sort of, if you're trading after hours, $4,000 and $7,000. If you don't have that, you start on the micro. Now you may think, oh well, hang on, my broker says I only need after hours the day trading margin. That is correct, but risk management, we never risk any more than 2% in a trade. Now let me seriously ask you, what would it mean to you and your family if you could earn an extra $1,000 to $2,000 a day, or $5,000 to $10,000 a week? It would be a life changer for 98% of a population. When I show you these setups, don't look for the reasons why they don't work, because they kick butt, and I'll show you that in a moment. Look for the reasons why they do work, and the reason they work is we're trading EMA bounces, we're trading reversals that are what we call reversions to the mean. All of the setups that I trade are pattern based, geometric patterns that set up each and every day. And the great news is, with some training, anyone can learn to identify these patterns. However, you've still got to put some work in. That is, day trading and scalping, which is effectively what I do. It's not a get rich quick scheme. It's about getting rich slowly. It's about putting the time and effort in. The great thing is, you don't have to have a university degree, you don't have to have a college degree. What you do have to do is to be patient, and I'll show you actually the next one's a great little slide. I'll show you. So in principle, here's what I'm looking for. The dark blue line is a higher time frame, and so what I'm looking for on a lower time frame, what I call my entry chart, retracements and bounces in the direction of the higher time frame. Okay, now occasionally you'll get a reversal setup, and this could be what we call a T3, a mean reversion. It could be divergence, and I recommend that all new traders stay right away from divergence trade initially. Just trade in the direction of the overall trend. But as you're about to see, I love divergence trading, but I've been trading now for 28 years, so I've got a lot of experience. Now in the end, this is truly the secret. Discipline, consistency, and patience are the foundation of the Holy Grail. I have the Holy Grail here I'm about to present to you, and it is these things combined with trading patterns. The late Dick Diamond, I loved his description. He said you've got to sit like a cat in the bushes and wait for the setup before you bounce. And what Dick would say, he'd only trade the 80-20 trades. If it was a 60-40, he was not interested. I call them easy money trades. So we're looking for the easy money trades. So in the recording I'm going to be showing you, here are the screenshots from the recording. Okay, now this is for members watching this, so I've got a lot of members around the world. That's a T3, and this one up here was a 2D pivot bounce. See these lines here, traders? They're called pivots. They plot automatically. Once you understand what a pivot is, they become very easy. You see, almost every trading platform plots these automatically. Okay, so there's nothing, you don't even have to buy them. And so with these, you'll get these certain areas where we bounce off. See this one down here. In fact, just looking at the market now, the trade I took just a few minutes ago, which I'll show you, I was bouncing on this is a total separate day, this recording, this one's from, off exactly the same position. And see that black thin line? That is an EMA from a higher time frame. And so after 28 years, I've discovered some, I don't want to call them secrets, but I've discovered some really important levels that they're what we call predictive indicators. And a predictive indicator means the market's going to go to that particular point. So we had a nice bounce off that point. Let me just go to the next one here. Now this looks very messy, but we had a trade there, and here I had a loss. Okay, no, what did I do there? Did I get out there? No, yeah, yes, I was stopped. Sorry, that was a loss. Okay, for members watching this and any other trader, we had a pullback, rallied up, had a pullback, I entered again, and I got stopped. But then I had a range of winning trades straight after. You're not going to get every trade, but that's where we need to think and trade like a casino. Do we see a casino changing the house rules because they have a couple of losing trades in a row? Of course not. They know that over a series of hands or bets that statistically they're going to come out in front. And so a casino has what we call an edge. We have an edge in the market also, which is our pattern-based setups. So I'll show you the live recording of this in a moment. Now, not about an hour later actually, after that I then had this set up just here, and this is called a T3. Notice the angulation here. Now angulation trade is a very simple concept where you see price action angling strongly away from your EMAs, becomes a very high probability setup, and I call it an easy money trade. And here we even had some divergence, so that ended up now being 6 trades, 5 wins for 1 loss. Now the trades I just took a couple of minutes ago, which I'll show you, we'll go to the live chart in a moment, then I'll move on with the live recording, is just here. Okay, so what I had here, and this is, I call this a big pick, and I'll show you why I call it a big picture double top. So I shorted here for members watching, just your classic T10, nothing special about it. I exited that trade, and then I jumped in just up here, and I took this as a little slingshot. Where did I exit? down here at the 200. Why? Because we bounce off it all the time. So that was a quick scalp for 1 point on 10 contracts. Now, that was actually on 12. I actually made an error on the dome. I normally trade 10 contracts, but I had another market, I won't get into it, where I trade 8. I was using the same quantity. So anyway, but I want to show you what happens here. So I shorted here and I exited the trade, and as you can see, it looks like it then went and ticked through. Well, let me show you this on the charts. This is it right here. Okay, so I shorted there, I got out, it ticked up a little, then came down and then bounced off. For members watching, that then become what we call a 3B. See this one just here? Now if you're an experienced trader, I want you to listen please very carefully, because you're going to be able to pick this up really quickly and see the power of this. And so many traders, you don't know what you don't know, and you have what I call aha, now I get it. So what I use, traders, and one of the secrets is I use a higher time frame. Okay, so I've got a higher time frame. Now see this here. When would we normally jump in and say take this trade long, and I just started trading here, and even jump in, and I was preparing for this, so I didn't get to take a trade here, take this trade. Let me share one of the greatest, best kept secrets ever. And why don't we just start with this one? See over here where we had a pullback. I want you to look on my anchor chart. So we call this the anchor chart, a higher time frame. When you have a very deep pullback, we wait for the anchor chart 1 candle to close back in the direction of the overall trend. So that keeps you out of a lot of chop. So that would have been a beautiful trade. You had one over here. See that one just there? Just the mechanical trade that every single trader should be picking up on, trading with the trend. Okay, we've got a retracement. When's it going to stop? Like say if we look here, sorry about that. So if, say here, do I go long here? Do I go long? No, because our anchor chart is pulling back as well. It's red. Likewise with this, where the market rolled over just here, and let me do this just to easily, no, I've got it turned off here as well. So where we rolled over just here, this is an easy trade for me to take. It's a rules-based pattern actually that appears there. That's a pattern, believe it or not, but you're using your higher time frame to confirm the trade. Just like this one here is a pattern. You get a pullback. Do we enter here? See the white paint bar? That's called my super scalper. Do I jump in? Does the anchor chart 1 candle confirm? Not yet, it doesn't. Now it does. And every one of these steps here, traders, is worth $12.50. That was a good 10 tick step. Now we've just pulled back and we just had a trade set up just here. Is that a T10? For members watching this video, you have a T10 on your anchor chart 1. Where would you expect price action to come back? See the purple line? Bang! See how I'm finding some support right there. Traders, you can't make this stuff up. We see this every day. Okay, and after 28 years, this is just what I've discovered, and it just makes trading so much easier. So let me go back to the PowerPoint. So when we get back to this, so you've just seen that there and why I exited, and you could see it went down a few more ticks, but then it bounced and reversed. So we can sell and buy into these key areas, but if we're selling into a major support area or resistance, and they're easy to learn what they are, you just want to either get to break even or you cover. You take your profits there. Now remember I said about that level. Let's just look what's happened. Look what's happened. We're bouncing at the moment off that level. And look over on your anchor chart 1. Now just a couple little things here. We've got a lower high here which can affect that, but that's another story for another time. But let's go back to the PowerPoint and continue. Now, to trade with a 10 tick, so if you're going to trade a 10 tick ES, and you could have, sorry, let me say that again. If you trade a 2 tick ES, you might have up to a 10 tick stop the way I trade. Now, if you don't have, and what you'd actually need is 6,250 to stay in your account, that is to stay within the 2% rule. If you don't have that, you start on the micro. See, the micro contract is 10% of the big contract, and so you can start off there with $630. Now you can actually start off with as little as $400, but it means you have a smaller stop loss, which is not always good, by the way. And I explain that to when I train my members, and quite often you will see I've got a smaller stop loss, but it's for a specific reason. It might be a bounce off a certain area where it's such a high probability easy money trade, you can get away with that. But you start on a micro, and this is where so many traders just ruin their trading career, because they don't want to do this. They don't have the required funds, so they jump in, they're risking 5, 6, 7%, and they wonder why they get wiped out. But the worst part is they're not only losing their capital, but what it does to them personally, the scarring mentally it gives them as a trader is very, very hard to overcome. Here's the right way to do it. You start on a micro. Even if you've got the big bucks ready, start on a micro, make all the mistakes you're going to make, and then you go to the big contract. But here you're after 32 ticks a day. Okay, 32 ticks a day within 12 weeks, potentially then you've got you're on 1,500 a week. And by the way, some traders may say, that's all I want, I'm just happy to stick with that. But then you may choose to roll over to the big contract. Now, many of you have seen these videos before and heard me explain this. And by the way, you can download this spreadsheet here, and if this is on YouTube, this particular video, if you go to the description link below, you'll be able to download this spreadsheet. And I've got a little training video which you also get a link to, just teaching you how to use this. Okay, so it'll just give you some ideas how to use. So click on the description link below to get a copy of this. So here, if we now trade the 2 tick with a 10 tick stop loss, okay, and here I'm after $313 a day, round off. Now I've just got a philosophy on how much to go per day, per market, per time frame, which I won't get into now. And I believe in POQ, had to think then, power of quitting. Get in, get out, get paid. Power of quitting means when you hit your daily target, that's what we can finish for a day. Okay, and so there, if you're trading 10 lots, your target's going to be around $3,000 for the day. So, oh, by the way, where was that? And this is on 5 lots. Okay, now let's move on though, because I do want to get to the recording. And so what's below that? Unfortunately, I can't see below there. Okay, yes, and this is important then. I look at trading, I'm a scalper, which means typically I'll be in a trade anywhere from 2 minutes to 15 minutes typically. Now you can go for the home runs, but many of you have heard me talk about Moneyball in the past, and in the movie Moneyball he says get on base. That's all you got to do, is get on base. No need to go for the home run, get on base. And so if you like, we're scalping, we're in and out, in and out. Now typically to hit this target of $300, you need 5 net trades after any losses, and you're going to be there. Now some traders love going for 4 ticks. Okay, they're going to need to trade more trades, greater number. Now also, just before we go to the recording, I do have to say that if you're trading say during the New York hours, a 2 tick is fine now, but during the New York hours you've got to trade a higher time frame. But then we have greater volatility and greater moves in the market as well, so it actually becomes in many ways easier to trade. So let's go to the recorded session. But when we go to the recorded session, here are some of the secrets. Okay, I'm looking, where are my pivot levels and Camarilla pivots? Now all of these areas, if you're brand new, you might think, my goodness, how am I going to pick these up? They plot automatically on your charts. Okay, so once you understand what they do, it's a bit like driving a stick shift, okay, as we call it down under Australia, a manual. Okay, in 30 days you've got it down pat, but initially got to change your gears, use the brake, the accelerator, the clutch, look in the rear vision mirror, use the indicator. Once you understand these, because they plot automatically, you really clearly it just becomes so much easier. But they're important. And you may notice in my videos I go very in depth, where you'll have every man and his dog thinks they're a great trader and educator, but they don't want to show you their trades. Okay, they don't want to show you what I'm about to show you and what I've been showing you, because they just want to sell their wares. Yes, I want you to join my live trading room. I want you to become a member of mine. However, it's no good becoming a member if this is not really going to be for you. Okay, so if you're willing to do the work, this is for you, and it ain't rocket science. Let me show you what I mean on this video. Okay, so with this video, let me just tell you, no, I think you can still see me there, but let me now, I'm going to give you a running commentary of what I'm looking for here. Now first of all, this is on the ES2 tick. Okay, so ES 1.5 million contracts, one of the most traded markets globally. You can start on the micro. This is a T3. These are just plain vanilla entries. So is this one. Okay, and this is just a great this was a great pivot bounce and divergence trade. Now with modern ATMs or trading domes, you can set your profit targets in them and your stop loss. What you'll see me do quite often is adjust my chart. I'm looking for any major support, and here it is there, a classic one. So you know how I said we want to know where our pivots are, and this is the reason. Price rallies up and we're bouncing off that level. Now down here I've got what have I got? It's an 8 or a 10 tick stop. I'll probably put that in. I recorded this a few weeks ago. Maximum a 10 tick stop. I can't remember what my target is. Usually it's going to be 8 to 10 ticks. Okay, 10 tick target. Now I may not always get 10 ticks, and here's why. Let's just say hypothetically, if I'd have entered a trade up here somewhere, and if I can see just above I've got a pivot, I know there's a very good chance I'm going to bounce off that. But it's also a very high probability easy money trade that I'm going to go up there and kiss the pivot. So I might only go for 4 or 5 ticks, just like you saw with that ES trade I took earlier, where I only picked up 4 ticks, but I was happy with that because it's such a high probability easy money trade. Now I will fast forward this some of this. So what I'm looking for is the price come back down here and to then bounce. So as we're coming down, you may notice now I've gone to break even. Now the reason I'm at break even is, of course, we don't want to see a bounce and then we rally back up and we give all of that back. So down here is a very similar to trade to what I mentioned that we just had set up live a couple of minutes ago. And so this is actually it's a loaded trade. It's what I call a T12 and a 3B. Don't worry about the terms. There's a cheat sheet with all of those. It's easy to learn, but it becomes a loaded trade because you've got multiple reasons for taking this particular trade. Now what we can do with a lot of these is go for larger targets. Like there's a very good chance, and I can't remember whether we do or not, go up there and hit the pivot again. But once again, as a scalper, I want to get in, get out, get in, get out. I've got power quitting. I want to hit so many ticks a day and then exit the trade. So as we're going up here, and what's going to happen here, just move this along. Now just note here I've gone to break even just here. Okay, we're getting closer, and I went to break even. Now here I can't remember why. Aha, that's why I went to. Now this is just a great, let me go back to that. This is just a great example. These are just invaluable, what I'm about to show you here. And I've never seen this written up in a book. Well, actually, look, support resistance levels are, but that black line, not that straight one just under there, um, that is an EMA from a much higher time frame. And what you're about to see is we get a temporary bounce off them. Now, I can't remember after what happens, whether we come down dramatically or go straight through it. However, if ever I go up to one of these levels, I want to get in, get out, to take the profit I've got on the table, because sometimes you have a major bounce. Now, this is where, and look at that there, that's just a great example. See how we bounced off it there, here we got a pivot bounce. By the way, for those that know what divergence is, beautiful divergence trade. That was a trade I just took up there, and I'm potentially bouncing here. Now this is where in my, and I'm not doing it, you won't see any ads on this video, but this is where in the live trading room, in my coaching room, I'm training you how to pick these. As they say, give a man a fish, you feed him for a day. Teach him or her how to fish, you feed them for life. So this is a major area of support or resistance just here. Now, if I remember correctly, I actually had just here, and I get stopped out on the trade. I'm buying back at that level, you know, and really I should have sat this out. Now, you don't have to be perfect, because I'm pretty certain this is where I had a losing trade. And yes, I get stopped here. I bought right at that level again, which I should not have done. You don't have to be perfect with your trading. You just have to be consistent, not consistent with making mistakes, but consistent with your setups, because that also was a certain setup, but I didn't get through, and now I come back. Now I've got a classic trade entry, which is what exactly we had live just now. Now let me go to this live one, because I think this is important that you see this. So you may remember a few minutes ago I said to you that you've got to be more cautious of this one, okay, because we're at this lower high. So what that means is you want to make sure that you get to break even, okay, once you're in the green, because sometimes when you get these lower highs, now it would have been much more high probability for a reversal if we had a lower low, but we did have a lower high. It is a 3B. So once we, and there I would have been in at 54.25. So what that means is once I hit up here, and probably about here, I would go to break even. Okay, I'd go to break even. And here anyway, now I'm just going to tell you 1 2 3 4 5 6 7 8. You've hit 8 ticks. Now see, this stays high. That makes your perfect target for your high. Remember on that PowerPoint, just going back to this again. Now I'm chopping around, but you can watch the recording again. Remember, I can't see it on my screen there. So remember just here, where are your intraday swing highs and low, and where's the current day's high and low? Once again, all of these are price magnets. We price action, and as professionals we buy and sell into these levels. Now you'll then get what we call front runners, and I'll get back to this video in a sec. See up here how we missed the high up there by, it's called a tick. That's the pro traders, because they know that a lot of amateurs will all be looking at exiting at this level, and the pros will run it up there and exit just before that level. But getting back to our recording, so back here we've got a bounce there again. That is a 3B. Let's move this along. Now here is another trade entry just in there. Remember, I entered this one just here, and I got stopped. I've now made another re-entry. Why? Because even though I got stopped on that trade there, it's still such a high probability trade. Okay, so that'll disappear in a minute. So I've taken that and I've actually added, I was still in that trade and I've added to this position. And the reason I've added to this position, it's such a high probability one. I'm already in this one, now I've added. Now very quickly, you would not add to a position if you're risking 2% of your account. One of the golden rules, we never have any more than 2% of our account exposed at any one time. There's a saying in scalping and day trading, there are old traders, there are bold traders, but there are no old bold traders, meaning if you take risks, you're going to wipe out your account. So like myself, I only risk 1%. I can add to a position another set of contracts. And by the way, here is a great example. I had a 10 tick stop and it came back down, and my 10 tick stop, I think it come back 8 ticks. It kept me in. I kept my 10 tick stop loss there. Anyway, we'll see the end of this in a moment. So that was another where I'm in that one there, and I didn't add to this one. And the reason I haven't added again there is because I'm already exposed. Okay, I'm already in the maximum amount of contracts I wanted to trade that particular day. But there was another perfect trade entry. Now I can't remember what happens here, but see this swing high over here? We may not even get to see where it goes, but when we remember in that slide again, I said where's the major swing highs and swing lows, because we quite often will go back up there and retest those. Now after 6 or 7 hours of training, you pick this up. Now and let me just take that back. Look, the secret is what I call the Goldilocks rule when it comes to mastering the art of day trading. Not too easy, not too hard, just right. If you're a brand new trader, you start off by learning how to trade your 2 and your 3 Bs. You had one there, and there, or even you had one there as well. You learn to trade those because they're very, very rules based. Okay, and you add as you go along. And so very important, you treat this as a 60 to 90 day internship. But what would it mean if you could achieve these sort of bottom line figures on a consistently basis? It would be a life changer. Now just there, here was another setup. You had one there. I wasn't in that one because I was already in 2 other positions. If I wasn't in that one, we've got another one just there, and we had another one set up just here, and here's the day's high. And let's just see if we go up there and hit that. Maybe the recording might finish here. I'm looking at the anchor chart there. Notice here we're almost coming up to that high. These are what we call the easy money trades, because the market and pro traders, we drive the market up to these levels. The market loves to go and try things twice, loves to go back up there and retest things twice. So traders, for those that are considering a career in day trading for a part-time or full-time income, so as I mentioned, there was your 3B there. Now this one is not set up yet. Why? I've got a deep pullback. My anchor chart 1 is not confirmed. This is not rocket science, traders. It's truly not rocket science. It's just about learning these geometric patterns, what exactly we're looking for. For an example, see that line there? I call it the trigger line. Look how that turns on a dime. Now for those that may be new to trading or experienced in traders, what does that mean? See the arrows? It turns on those, and it's something that I discovered that, well, I didn't put it together as it's based on what we call square root numbers. And if you've got the trigger line, see that I call that a rule of one. If you can scalp in the direction of that using it as a trend directional indicator. And you know what, it's free. I give all of my indicators away free, but look at that and look how it turns on a dime. How would you trade it? See how the trigger line's coming down, See how now you get a hook just there, that's the arrow. Well, you can sell there again, but see how it turns on a dime. You can then exit your trade and enter a trade. But look, traders, I'm getting a bit carried away with this. I'm covering a lot of information for you. So traders, hopefully you picked up some ideas out of this video. But day trading for a part-time income, fantastic career. Cheers, traders.